Welcome back to Everything Tesla Facts, everyone. It's no secret that Tesla, like many automakers, is having trouble increasing sales due to production issues. Given the difficult market conditions, investors are only likely to look for ways to protect their investment and, if feasible, turn a profit. Investor judgments about the stock are likely to be influenced by warnings such as Chamath Palihapiti's. Palihapiti claims that this is the reason Tesla investors should be prepared for the company's future. See this video for more information. But before we get started, remember to like, subscribe, and enable bell alerts so you can stay informed about everything that's happening with Tesla. Having stated that, let's go on to the video. A Canadian venture capitalist named Chamath Palihapiti gave some insight into what he thinks Tesla's future holds. As the head of the venture capital firm Social Capital, Palihapiti, a former Facebook executive, is a long-term investor in Tesla and the stock market in general. Since purchasing Tesla's convertible bonds in 2017, the CEO has been optimistic about the company, stating that it was his preferred investment at the time. Elon Musk, the CEO of Tesla, would have become the first trillionaire if the billionaire investor had previously asserted that Tesla's stock could be worth 3 times its current value. Palihapiti expressed his apprehension about why investors would want to sell a profitable stock by advising them not to sell their Tesla shares. He went on to say that instead of caving in too quick profits, investors should stick onto their stock. The CEO of Social Capital also asserted that Elon Musk, the CEO of Tesla, had a solid understanding of the industry and has continuously been among the most significant businessmen in the globe. Speaking to CNBC about Tesla's energy business, Palihapiti emphasized that the firm's growth extends far beyond electric vehicles and that its renewable energy components have the potential to make the EV company worth trillions of dollars. According to the stock investor at the time, Musk was working on a plan to capture the energy, store it, and then utilize it to combat climate change and help people be more productive. Given that Elon Musk has disclosed Tesla's intentions to expand its solar and energy storage business, and that the company predicts a sizable clean energy industry by 2022, this may be considered an accurate prediction of the company's future. Musk claims that even though supply chain limitations have hindered the expansion of Tesla's energy division, the company still intends to increase production and deployment more quickly than vehicle manufacturing if supply chain problems are fixed. The CEO of Tesla added that in response to rising demand, the company plans to construct a plant specifically for the utility-scale Megapack energy storage product. Palihapiti claims that Tesla is a distributed energy company. I believe its value will eventually surpass its current valuation. Given all of Palihapiti's positive remarks about Tesla and the number of bullish predictions he has made, it is somewhat unexpected that he recently sold his Tesla stake. Given that Tesla's longtime investor had to sell off his shares, this was a significant event for the company's investment base. Palihapiti claims that the action was taken to raise money for more investment ideas. He went on to say that sufficient finance is required to carry out these ideas because he does not have an endless supply of capital. However, he acknowledged that while he remains optimistic about Tesla, his position on the business has somewhat evolved. According to Palihapiti, the EV market is still expanding and appears to be undervalued, especially as new businesses enter the market and progressively evolve into significant rivals to Tesla. With the recent introduction of a program to locate and examine the driving patterns of owners of the Cadillac Lyriq, the first electric model of its high-end brand, Detroit automaker General Motors has really pushed things a step further. To increase sales, the auto firm offered prospective consumers a $5,000 car discount. The company also plans to analyze how its customers use their vehicles in order to enhance its products and services. Similarly, Ford Motor Company just reported excellent second-quarter earnings. The business seems poised to surpass Tesla in the market. The carmaker will probably be compared to Tesla in many ways because it is going electric. Additionally, the business has operating cash flows of nearly $3 billion. Which it may utilize to fund its ambitious aspirations to increase EV production. Due to the heightened degree of competition, Tesla must go above and above to continue to be the industry leader in electric vehicles. The increasing rate of inflation, which has impacted not just Tesla but the EV sector overall, is another element that might have prompted Palihapitiya to take this action. In a podcast, the CEO and creator of Social Capital expressed his worries. About growing inflation, Palihapitiya described the state of the market as persistent and stated that he believes high inflation is here to stay. Additionally, he expressed his hesitancy to invest in the current market. It's also not surprising given that Tesla has struggled greatly with inflation, particularly in recent months. As a result of the company's struggles with the growing cost of suppliers and raw materials, the price of its products has gone up. Musk said it has been really challenging because inflation is at a 40 or 50-year high. Despite the company's goal of making EVs accessible and affordable for as many people as possible, Musk went on to say that he believes the official figures actually underestimate how high inflation is. According to him, suppliers are putting a lot of pressure on manufacturers to raise part prices by as much as 20 to 30% from the previous year to the end of this one. According to recent reports, Tesla anticipates that a protracted supply chain issue would restrict its factory's capacity to produce, and that this crisis will persist for the remainder of the year. Tesla announced a lower-than-expected decline in quarterly earnings after the price of its electric vehicles skyrocketed. In the second quarter, Tesla's overall revenue dropped from $18.76 billion to $16.93 billion. Palihapitiya's focus on the consequences of inflation may indicate that investors should prepare for unforeseen shifts in the company's stock price. Demand for Tesla automobiles may be significantly impacted by a sustained price increase, which will ultimately have a negative impact on earnings and stock value. Inflation is only one of the market issues that Tesla has been dealing with. The stock has also been impacted, going through a number of ups and downs, particularly after the lockdown at Tesla's Gigafactory in Shanghai, China. For the quarter that ended in June, Tesla's new car deliveries decreased by about a fifth, since it lost production days as a result of the facility's closure. Tesla claims that the decline is primarily the effect of supply chain disruption and a string of COVID-19 lockdowns in China. During the 3 months ending in June, the business delivered 254,695 new automobiles, which was less than the 295,000 analysts had predicted. The EV startup is facing supply chain and employment issues at its new Berlin manufacturing, in addition to production issues in China. Despite multiple delays in the factory's launch, production levels appeared to be lower than anticipated. Despite Tesla officials' claims that they anticipated a gradual ramp-up at the Berlin facility, in April, May, and June, Berlin workers produced less than 9,000 vehicles. Palihapitiya and other investors may be concerned about this phenomenon. Similarly, the recent sale of almost 75% of Tesla's Bitcoin holdings raises the possibility of the business experiencing financial difficulties. Returning to Palihapitiya's guidance on selecting the best technological investment, it appears that stock investors continue to have some favorable opinions on Tesla. In an interview, he listed the 3 stages of a technology company's development. He claims that most businesses may need to go through 5 to 10 years of experimentation before moving on to the product-market fit phase and finally the scaling phase. Comparing it to Tesla, Palihapitiya thinks that the EV company has achieved an extraordinary return moving past the experimental stage and into the product-market fit phase, which is not well understood by the majority of investors. He went on to say that the true opportunity lies in understanding each company's current position and the future sources of its profits. Although Palihapitiya is invested in almost any working stock and may still be optimistic about Tesla, it is safe to assume that he also thinks the stakes may be too high. As a result, investors would want to reevaluate their stock holdings. While taking into account the effects of Tesla's numerous market difficulties, because of the constant volatility of the stock market, it's critical to be prepared for unforeseen obstacles. How do you feel about these cautions regarding Tesla? Is the future of Tesla a cause for concern for investors? Tell us in the comments section. Go ahead and click on one of these 2 videos that are currently displayed on your screen while you are still here. I'll see you there.